Hey traders, this is Blake Morrow with Trader Summit. With me once again is Helene Meisler from Real Money. Good to see you, Helene.
Hi, Blake. Thanks for having me.
I'm actually excited to have you back here. It's been a while. I mean, the last time we talked was probably a couple months ago, and it's nice to have you back here because I just enjoy your company, and I know you're such a legend technically and just in the markets in general. But everybody loves your technical analysis prowess and how you approach the market. So thanks for joining us again.
Well, glad to be here.
All right. So last time we spoke, you did a presentation on sentiment and how it plays a big part into your trading and your decision making. And we're starting to see some extremes as far as sentiment goes in the markets right now. When you talk about commodities, even currencies, a lot of commodity currencies, we can just add them together, but commodities just in general, yen extremes right now. Are you seeing any sentiment extremes in equities, and how's that factoring into what you're doing today?
Okay. I think we saw a sentiment extreme about 2 weeks ago, just before, this latest lift. But oftentimes when we've had a rally of the magnitude that we've had in the S&P, we see sentiment shift very quickly. And we haven't seen it shift nearly as quickly as we often do. And I think that one of the reasons we haven't seen it shift back to bullishness, like full out bullishness, is none of the fundamental reasons that we went down have changed. So normally you would have gotten the rally because whatever, you had the Fed pivot, inflation wasn't as bad, you have maybe some progress on the war front, you had bonds, nothing has changed, inflation, nothing has changed. And so I think that what you have is technical people are warming up because they've seen the price move. But the fundamental folks just don't have anything to hang their hat on. And so it's a much different sort of shift in terms of the sentiment that we've seen for the last several years when we do have the kind of rally we did.
Helene, I think, you kind of pointed out, and I know you're not a big macro person. It's not your forte. You tend to look at the charts, but you actually pointed out a few things that are, you would think would be affecting sentiment in the market, like what's happening in Russia with the rates rallying, with bonds selling off. You would think monetary policy tightening. You would think all of that would factor into more of a bearish sentiment. But as you pointed out, it hasn't really flipped. So it's a very interesting market, especially if you're just trading equities. Obviously, other markets have been moving quite a bit, but the equity markets seem pretty steady Eddie right now, at least for right now. Would you agree?
Sort of.
Okay.
Let's go look at some charts. How's
Let's
that?
do that. I'm all about the charts, and I know everybody at home is about the charts. And Helene, as you pull them up, I want to say, guys and gals, if you are watching Helene here in your office, at home, on YouTube, make sure you give her a thumbs up. She would appreciate it. We'd appreciate it. And make sure you subscribe to our channel. All right, Helene, go ahead.
Okay. We've had a heck of a rally in the market. We've come up, I think, 7 or 8% in the last week or so.
Yeah, big bounce.
And people are, flashing around all these sorts of, well, the last time the S&P has gone up 1% a day for X number of days. Okay, fine. That's just not my kind of thing. I'm going to show you what I'm looking at.
Great.
And what I'm looking at is, first of all, my overbought, oversold oscillator. Okay. Here's where we were a week and a half ago, oversold. Here's where we are today. I think, because I do the math behind this, I think sometime in the next 3 trading days, this is going to get overbought. I know it looks overbought, but I promise you, if the market stays the way it is today, it's going up again. It'd probably look more like it looked here, or here, or just whatever, it's not going to look like this.
And we're looking at the NYAD advanced decline line chart, right?
It's what it is. It's the 10-day moving average of the net of the advanced decline line.
Yeah.
So if I look back 10 days ago and see what kind of numbers I'm still dropping pretty big negative numbers for the next 3 days.
Okay.
So if I drop a net AD of minus 1600, and even if I add minus 500, this is still going up because my momentum is still moving upward. And if I add a positive number, it's really going to shoot up.
That makes sense.
And I start running out of those kinds of numbers on Monday.
Right.
So that's how I know that after Monday, whatever upside momentum we've got going on here, I think peters out.
And, and that might coincide with the end of the month. And, you take maybe that's the end of the fiscal quarter for Japan too. I mean, there's a lot of things that kind of coincide there. And I think a lot of traders, Helene, and I know you're going to be pointing this out probably here very shortly. A lot of traders really get hung up on one indicator and they really say, well, the advanced decline line is showing me this. But really what you do, and I want to emphasize this especially for a lot of the newer traders or investors in the marketplace, is that you use a multitude of indicators to really give you clues on how to approach the market. Is that correct?
Right. I don't think there's any holy grail in the market. I don't think that there are really signals. There's no buy signals. There's no sell signals. I think it's a confluence of indicators coming together that can give you a move. I also don't call tops. I don't call bottoms. I'm not even interested in that. I'm just looking to play a swing in the market.
Yeah.
That's to me, that's the best I can do. And if I ever start calling bottoms and tops, really run the other way.
All right, Helene. I've been known to do that every once in a while, so I'm gonna take that to heart. So, what else are you going to show us today?
Okay, so now we were discussing sentiment. So let me discuss the Investors Intelligence Bulls. Investors Intelligence is not a survey. It is someone tallies up what the newsletter writers are saying on the market, whether they're bullish or they're bearish. So in other words, they have paid subscribers. And so it's not just, yappers. And what you can see is we got down to 29% bulls just before this recent rally. And that's very low. I mean, in terms of lows, that's bear market low kind of stuff.
Okay.
Once you get down into the 20s, you're at bear market type stuff. Now, that doesn't mean it has to be the low in the market. I mean, we got down to 20% bulls back in like October of 2008. And you know that didn't stop until March, but that was your peak bearishness. Anyway, what I wanted to show you was here that in this last week, the bulls jumped 5 points. That's quite a jump. I mean, you're only back to where you were in early February. But that's your sentiment turning slowly.
Yeah. Okay. All right.
And then I would tell you this morning's numbers on the American Association of Individual Investors, the bulls, you can see the jump there. And they went up, I think it was 10 points from week to week. That's quite a lot. So you can see that the sentiment that we had that was so bearish 2 weeks ago is coming off the boil, if you will.
Okay.
If you want something a little more intermediate term, here's the 4-week moving average of the bears. And, that's starting to head down here. But what I really want to talk about is that everyone sort of has this view that bear market rallies are short, sharp, over and done in 2 or 3 days.
Yeah, right.
And I'm not really sure where that sentiment has come from. My view is that they can often be many weeks or months. And so I just wanted to point out that if you go back to the this should have said 2002, 2003. If you go back to that time period,
okay,
here is September 2001. We were what, 18 months into a bear market there. And you had a rally that we rallied 20%, over 20%. And even after we rallied, we sort of did a big mill around for a long time.
Yeah.
And then we didn't head down again until, a big low for months. This over here was March 2002. So that's 2 years after the high.
Sure.
Okay. Let me show you what 2007, 2008 looks like. This over here is that Bear Stearns low when Bear Stearns went out of business. Okay. You had a low in January, you had a rally, you had twin peaks in February, you came down into early mid-March, and then we had a rally. It lasted until May. Now that rally was only, about 12% in the market in the S&P, but still, it was multi-week, multi-month. It wasn't
it wasn't a 3-day move, right? Yeah.
Right. And just to give you some statistics on that 2001 rally, you had the bears at the lows in the American Association of Individual Investors. You had them at 45%. And by the time that rally was done, they were down to 15.
Wow.
Okay. And the bulls went from 28 to, get this, 70.
No kidding.
Yeah. In 2008, the bears went from 58 to 25, and the bulls went from 20 to 53. Okay. That's just to give you an idea of, that not all bear markets are 2-3 day rallies. And so I just wanted to finish up by showing you, here's the S&P. This is only through 2 days ago, but this low here in January, then we came down in late February, and then we had twin peaks in February, and now we've come down into March and we're having a rally. Take a look. Isn't that a similar pattern?
Yeah.
To what we had in 07, 08? So in other words, again, I don't call bottoms and tops. I don't call bear markets and bull markets, but my point is that what happened here was sentiment got too bearish and we got oversold.
Right.
And I think what's going to happen in the next few days is we're going to get a little overbought and we're seeing sentiment shift a little bit. And if I have to guess how that plays out, it's going to start to play out something along the lines of this, where you get a little peak, you pull back, you come on again, and, until you sort of use it all up. Or you're going to get like this, where you get a little peak, you pull back, you go, something. In other words, I don't see this ending just because we get overbought next week. I can see a lot of up and down and up and down and up and down, and just enough to get people, maybe at some point, what happens is, to go back to what we said at the beginning, is the narrative finally changes. Something happens to get the fundamental people to say, oh, okay, something shifted.
Helene, I get messages like this, and I get text messages say, Blake, we rallied 8% in 3 days. This is just ridiculous. I cannot believe it. These are messages I get from trader buddies that I've had for 20 years. And as well as I do, the markets can stay irrational longer than you can stay solvent. I mean, that's something that we as veterans in the market really know that is true. So true. I mean, the markets could really stay sideways and in a range going into we're not too far away from summer, where people start hanging it up for the summer. So, I mean, unless, as you pointed out, unless the narrative really starts to change in the markets, we could be range bound for a while. Wouldn't you think?
Well, I can see that. I can also see that if you really wanted to take a step back on sentiment,
yeah,
forgetting sentiment of the entire market, if you break it down by groups, you've got, everyone loves commodities, just the way they loved FANG stocks a couple of years ago. And the FANG stocks, well, they're not terrible, but, oh God, those small cap growth stocks are terrible. And so you really don't have an overall everybody hates the market kind of thing. I think you really have the two different groups, which is either or, which is the same thing we've had for years, which is when the FANG stocks, which really moved the indexes, were hot, people ignored the fact that every other stock was going down.
Yeah.
And so now the commodity stocks are going up. It's not a good economic story. So they don't like the market. I mean, it's
so,
you know, it's that wall of worry, but where is the wall of worry?
Yeah, right. Okay. Well, in this wall of worry, Helene, and I'm gonna leave it at this as we wrap up. In your opinion, where would be the best place for traders to be looking at this moment? What would you be actually focusing your attention on as far as opportunities to make money in this market?
Oh, okay.
That's a loaded question, right?
I think I've been saying this for months, is that after that January low, I think that a lot of these small growth stocks have been in a bear market for over a year. I think so many of them have peaked early last year. And I think what's happening is even the big growth stocks. And I think what's happening is people are starting to sift through the rubble of that. And they're going to start to sort out what's good and what's bad. So the first place they're going to go is to the big cap stocks. And so, you know, the favored names will now be probably a lot of the FANG names.
Okay. All right. Well, you know, and I know you don't like to think about these types of things too much, and you really like to let price action dictate. But, you know, those FANG names, those beat up names, one of the things that I would like to see as a trader and wanting to pick up some of those value plays, if you will, is I'd like to see yields come off a little bit because, you know, obviously the bond market with yields rallying and expectations that the Fed's going to raise rates, that is going to weigh on that technology sector. Wouldn't you agree?
I agree, which is why I don't think it's, you're not going back to the way it was. You know, you're not going back to they all go up and they're all terrific and who cares about earnings.
Yeah.
I think you really are, the people are really going to get very picky. But I think there are stocks to pick through.
Absolutely.
Whereas 6 months ago, I wasn't sure there were so many stocks to pick through down there of that nature.
Yeah.
And so I think that it's a process, and the process is going to require a lot of up and a lot of down. But in general, I think that the current rally we're in doesn't seem to me like it's going to be a return to everything is wonderful.
Okay. So in other words, you're not expecting to see all-time highs in equities, and you're more expecting to see range bound and being a stock picker's market. Is that correct?
Yeah. I mean, I think if we saw all-time highs, you'd have so many negative divergences, you'd have to go short.
Oh, all right. Well, there you go. So Helene, you know, I love your work. You and I have been following each other on social media, on Twitter for years and years, and I have utmost respect for you. I know you write a column at realmoney.com. Tell traders at home, how do they follow your work? Because I love doing it, but if they don't know much about you, how do they follow your work?
Well, you can definitely read my columns at realmoney.com. They are daily. And I think they're posted around 6 a.m. New York City time and Eastern time, excuse me. And they can follow me on Twitter at H Meisler, Meisler. And definitely on Saturday mornings, I do Saturday Chart Fest, which is just where I draw a lot of lines on charts and I maybe throw in a few indicators. And we also do a weekly poll where we ask everybody what direction they think the S&P is going the following week.
All right. Now I've found myself on the opposite side of that poll a couple of times already. So
okay. Sometimes contrary works.
All right. Well, hey, Helene, I want to say thank you so much for spending your time with us and the Trader Summit community. Remember, guys and gals, if you're watching Helene, give her a big thumbs up on the YouTube channel if you're seeing her there, and make sure you subscribe to the channel so you don't miss any of this great content that we bring you, and especially these interviews with Helene. Helene, I love having you here. I can't wait till the next time that we get to sit down and visit again.
Hey, thanks for having me.
Have a great day.
You too. Bye.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.